Yeah, I think it's a big responsibility after Adam, Paolo, Willy Boo, and that exciting panel, is talking. And thanks, Adam, for sitting here, by the way. Thank you. My name is Arnab Naskar. I'm the co-founder of STOKR. And there's a very interesting topic today I'm going to discuss is actually about product market fit of Bitcoin as an asset tokenization platform. Now, let's start with a small Q&A, effectively, right? Because I think it's quite end of the day. You're tired, I understand, and also there are a lot of panels after. I think there are 2 panels after me, right? So, and then you have the dinner, right? So, first question is, how many people? You don't need to answer, but if you want to, how many of you are holding, or you bought Bitcoin at any given point of time? Okay. How many of you have bought ETH? How many stable coins? Okay, so that's an interesting audience. And how many of you have bought stocks or bonds or something in tokenized format? So it's interesting, the amount of hands, which I see from here quickly, the amount of people who are holding Bitcoins or bought Bitcoin is more than any other asset. Now imagine that's an asset class that everybody is willing and knows about it, right? And why it makes sense, effectively, and this is a very interesting question, right? Bitcoin, as we know, we know as a store of value. Inflation hedge, you believe that that's the reality, right? The recklessness of the government will continue and it will not go back. So yeah, we need an alternative monetary system. But Bitcoin has also a very interesting element. It's the first time a store of value asset that has a settlement layer. Gold never had a settlement layer by natively, right? And the first use case, which we see in experimentation of the Bitcoin layer 1, was 2014. Tether coming on Omni, the colored coin era, effectively, right? There are a lot of experimentation happened back in the days, which is very interesting because there were not that many chains. And Omni has been a dominant platform for Tether for a long time. But then we started seeing changes, evolution, experimentation. We had a lot of events that happened with the block size war and all these kind of things. And then we came to the point where we had Liquid and Lightning, L2 and sidechain discussion, right? So where we moved is we realized, you have you don't need to spam the blocks effectively, right? And you don't need to make it, in the main chain, but you can effectively go to the layer 2 or the sidechain in that direction. And there are 2 interesting use cases that we saw. One is Lightning for buying coffee, effectively, if you want to use your Bitcoin to buy coffee, or for financial transactions. And Liquid, that point of time, started as a kind of platform where you can move Bitcoin between different exchanges. With that idea, the Liquid Bitcoin came in. And that's a very interesting evolution of Bitcoin as a settlement layer for an asset other than Bitcoin, effectively. In the last 12 months, I would say, we saw a next evolution that is happening where we are seeing RGB that is sitting on top of Lightning. It's a protocol, asset protocol. So now you can not only issue Lightning BTC, but you can also issue assets like securities, bonds, NFTs, infrastructure products in that sense, or financial products in that sense, on top of Lightning via RGB. And the RGB team is also here. I see also both. It is very interesting. There are a lot of experimentation that did in the last couple of years, and we see now they went for mainnet right now. Also, we see ARC and all these things. So we are seeing Bitcoin as an infrastructure is slowly building up the momentum, not only attracting stable coins, but also attracting securities. And some data that it's not working. Okay, perfect. Okay. So the first thing is what kind of assets we saw predominantly on the crypto digital asset market other than Bitcoin that has a wider mass appeal or wider adoption curve. And that's Tether, the stablecoin, right? And we all know Tether effectively is the largest stablecoin at the moment, closer to 200 billion, and it may scale with the USAT to $1 trillion. It's just a matter of time. But interestingly, if you see that Tether is primarily right now, though it started on Omni, it's primarily more in the EVM chain, that is, or Tron. That's what the big AUM is, right? But things are changing. Things are changing means if you see on the platform like Liquid, you have closer to, I would say, 100 million. Though it's a small number, but given the fact is the innovation on the financial infrastructure layer of Bitcoin is very new. adoption is also growing slowly. And there is no VC money. So there is no VC money pumping the money in the ecosystem, creating, huge ecosystem boost by airdropping and or something like that. So a lot of development happened here organically. So it seems to be very small, but it has a significant metrics because it is growing in an organic way. Taproot assets, there's definitely Paolo announced this year in number of places that they're very much eager to support the issuance on as a Taproot assets on top of Lightning. And I think as one of the largest stablecoin player, Tether is the only stablecoin, I would say Tether is the only stablecoin player effectively aligned to the fact that they see the Bitcoin will be the infrastructure for capital markets in the future. Very few, like I don't think USDC or other platforms ever spoken about that, right? And there is a very interesting angle. This is because if you see this way, stablecoin is effectively the gateway drug for any financial institution or player to come to the digital asset space. It's the entry point, right? And if the entry point is Tether, and that happens on the Bitcoin layer 2, that will transcend to the securities market because effectively you cannot grow a securities market or financial asset market without having a large AUM of stablecoins. But one interesting angle is a logical theory. You will think, okay, the first use case will be the stablecoin on the Bitcoin layer 2, and that will grow bigger than securities market. But here that happened differently, at least on the Bitcoin layer 2. In the Bitcoin layer 2, the securities market became much more bigger as of today compared to the stablecoin market. And I'm talking as this is some of the data that I pulled it from the Liquid network effectively, right? And STOKR is an issuance platform for tokenized securities on Liquid infrastructure. We are issuing the assets from 2021. We are at the moment managing over 1.8 billion worth of assets under our infrastructure, which we tokenize from our vehicle. And that's not the only metrics that we follow. One of the key metrics that we are very proud of is amount of money that we pay to the investors. Till date, we have paid over 250 million worth of assets or like a stablecoin value or dollar value to the investors. And that's giving a lot of push to the ecosystem. And there are some interesting assets that you see. I think the biggest one right now, the BMN2, the number is not updated because I took it from the Liquid page, and I think the numbers need to still get updated. It's closer to 1 billion AUM right now, as of today. And that will be one of the top 4 biggest tokenized securities. And this is not issued by effectively a larger player like BlackRock or Morgan Stanley or something like that. It is issued by a private mining company based in Texas. And it's effectively what is BMN in this side. It's a hash rate backed securities. So think like this way. What we did effectively over there, we securitized hash rate, which is effectively a future claim to the Bitcoin that is being mined. And BMN is a fixed term product. So maturity is a 4-year period. You get access to 1 petahash hash rate per day, multiplied by 365 days, multiplied by 4 years. And as an investor, whatever Bitcoin is mined, you get at maturity. So it's an interesting private asset, effectively. It's not a public asset. It does not survive in traditional market in that sense. The returns are not coming in your fiat bank account, but effectively in Bitcoin, at the end of maturity, and as Adam always says, Bitcoin is a hurdle rate. This is a product that actually outperformed Bitcoin in the first iteration by 32%. That's a 3-year period. The BMN one that we issued in 2021, matured in 2024, that outperformed Bitcoin by 32%. And we are also seeing a number of interesting products. We are seeing now USTBL, which is actually a tokenized money market fund product that launched, and it's also listed on Bitfinex Securities. I was at a conference, it's a parallel conference happening also from Bitfinex Securities right now, and we're also discussing a number of things, how this kind of assets can go to the crypto exchanges for listing, and we are seeing a tremendous amount of demand on those platforms for this kind of tokenized money market products, tokenized hash rate products, or like Aquarius fund also, we see a lot of demand of those kind of fund units effectively. And these are vehicles with the ISIN number and all these things. So what I'm trying to say here is we are not talking today in 2025 that, hey, we can do something or potentially possible to issue securities on top of Bitcoin. It's happening. We are closer to 5 billion. The total tokenized securities market is closer to, I would say, 30, 40 billion. There is a lot of platforms that are not visible. And liquid infrastructure products you cannot see in RWA, XYZ, and those kind of Dune platform because every transaction is by default confidential. And that's a very interesting point because the financial institutions for a long time went to the private chain because they didn't want a chain analysis on their solution. And this is what Liquid is providing. And I think there is a lot of room to innovate and bring new fixed income products, high yield debt products, money market product that provides hourly yield and those kind of things. And there are a lot of innovation scope. Now, why effective? And this is some of the players that started working on the Liquid and the Bitcoin layer 2 and have issued securities. Now, why? And why Bitcoin layer makes sense? Why not EVM or some other chain or layer 2, layer 3, layer 4, layer Z? Why not that? The first thing comes in is, does anybody know what does it mean by 2.17 trillion? What is that value is about? Exactly, that's the biggest digital asset market cap. Hopefully it will soon cross the gold. It's just a matter of time. Now, if you have that volume of liquidity in an infrastructure that is stuck there, there will be spillover. So creating an infrastructure on top of Bitcoin, you're not only creating on a robust infrastructure tech-wise, but also accessing the wider, deeper liquidity, which effectively grows because we believe in reckless spending of the government. That's happening. The second is the regulatory positioning. Bitcoin layer 2s like Liquid, Lightning, RGBs, they don't use L1 token created by a few closed-door investors managed by a few market makers, and that can crash over a weekend if there is a market movement. It's a very robust, and that's a Bitcoin that that weekend they were definitely crashing. It was 10%, but some of the tokens completely kind of wiped out. Regulatory positioning with Bitcoin is very clear, right? And there's a stable asset in terms of distribution, decentralization, and all this thing, and that gives a lot of stability to a lot of regulators. When you create an infrastructure products or asset products on top of Bitcoin, there is no gray zone whether it's a securities or not. The brand and trust. Bitcoin as a brand, I think when you, and this is the reason the first thing is whenever somebody has tried to do anything on digital assets, that's the brand people have done. And trust in the Bitcoin market, we say is don't trust, verify. But what is very important is credibility, right, and reputation. And the Bitcoin market, the companies that are building for years have actually gone, gathered the reputation, like players like Blockstream, players like Tether, have been hammered for years, but now is becoming one of the strongest players in the ecosystem. So there are a lot of reasons where the Liquid, Lightning, and likes of those infrastructures will create or power the next era of financial markets or next era of capital markets. And this is something like which I fundamentally believe it's a 2 trillion asset class. You will have a few hundred billion worth of derivatives. You can tokenize that, and this will natively survive on tokenized format. And that will not only kickstart and boost the ecosystem of tokenized securities, but will effectively make the Bitcoin the infrastructure for next century of financial markets. It was much more robust than Stripe. It's much more robust than Swift. It's much more robust than any centralized infrastructure that is built on AWS kind of architecture. And when we talk to financial institutions, right, there's always a question coming, hey, but I have always heard about EVM chain or this chain or that chain, and they are issuing, I never heard about on Bitcoin you can do anything. But you can do it, right? You just need to take the effort and learn, not be lazy, and go in details, because there is something happening, there is brewing. There's a reason the strategic Bitcoin reserve was strategic Bitcoin reserve first and not a strategic crypto reserve. And this is something, a tremendous shift in the global geopolitics and money and everything. So if you're a financial institution, I would say look into Bitcoin and see what's happening. And this will be a fantastic conference to learn more and ask questions. Thank you.
Thank you, Arnab. Thank you so much.